This is the briefing for Friday, January 12th. I'm going to start tonight, as I did last night, with a weekly chart of the spiders. I want to get a longer-term perspective in terms of what's happening in terms of price development and in terms of price structure. As you can see, since 2020, we've been in a rotational pattern in the stock market. We've basically just been rotating back and forth between about the 480 area and the 347, 348 area. Right now we are testing the upper extreme of this area of balance or this area of rotation. So the question is the market strong enough to break out to the upside, or is it not strong enough and we're going to see another rotation back down to test the lower extreme? Now, we are in a rotational pattern right now. This is 4 weeks of rotation right at the upper extreme. And if we look at what's happening internally from a long-term perspective, you can see that volume is falling off in this rotational pattern, which is typical, but breadth is declining and declining even more as we see this week testing the 480 area itself. So in terms of market structure, it does not appear that the market is strengthening internally, giving it the impetus that it needs to break out to the upside. But with that said, I want to go to a daily chart now, and this is the rotational area that I was talking about just a few minutes ago on a weekly chart. That's about 4 weeks of trading, and I want to go back to a weekly chart here real quick. So this area right through here on a weekly chart, this rotational area right through here is the same area that we're looking at right through here. So you can see the breakout to test the upper extreme, and we're right at that upper extreme right now. Lower support is going to come in right around the 466 area, which is this lower extreme from this area of rotation, and then below that is going to be the 460 area, which is the upper extreme from this area of rotation. So you can see the market is giving us some really good areas of trade location and support and resistance levels. Now, once again, as we look at this rally here, you can see what's happening now. Part of this low volume is a result of 2 weeks of holidays through the Christmas and New Year's area. But even as we come into yesterday's and today's trading, you can see volume is falling off even more. Breadth is declining. You can see this decline, a pretty good divergence, although we had a little bit of a spike up in breadth in today's trading. So basically, the market is not strengthening internally, and typically you would see that happen if there's going to be a breakout. Now, if there is a breakout next week that would break out of this area of rotation, it would be extremely important to see volume beginning to increase and to see breadth beginning to increase also in order to support that move. The same thing is happening in the Qs or the NASDAQ, and you can see the area of rotation here. Important support is going to come in right around 395, and then resistance is this high right around the 413 area. Volume falling off once again. You can see that we had a little bit of volume spike yesterday, but it declined again today. You can see breadth is declining, ticked up slightly in the NASDAQ today, and the Russell is showing more weakness than the other indices. So you can see that it traded up to 205, broke out of its area of rotation, and then this appears to be a false breakout, and it looks like we're back into another rotational area just below 200 and just above the 190 area. 200 is resistance in the IWM, and 190 is support in the IWM. Volume, once again, really not real great as we came down in this move here. A little bit of a tick up in volume in the last 2 days of trading, and then a tick down in volume as well. Breadth in the Russell is declining and not strengthening. And the Russell typically can give us an early signal in terms of a breakout move, and it appears to be giving us a weak signal, at least at this point in time. Now, the problem here is that we are at an upper extreme in a long-term perspective. We are at an we've broken out in an intermediate term And in a short-term perspective, we are still in an area of rotation, meaning this area right through here. Now, in terms of price development, we are at really a critical point, as you saw in the weekly chart, in terms of a potential breakout. If we break out of this area here, that's going to be a breakout in multiple time frames, which should be a substantial move. On the other hand, if we break out and can't move quickly away from this area, it could be a false breakout, especially if the internals are not confirming the breakout. And then we could see rotation back through this range, and then of course potentially a test of this support level. Now, it is always a higher probability that price will correct to the internals, but there's also a lower probability the internals will correct to support price. That typically happens around a news event. So we had a news event this week in the release of CPI and PPI, but it really did not have any effect on price development or on price structure in terms of strengthening the internals. So we really are left really just holding our breath right here at this multiple time frame upper resistance level that could lead to a pretty substantial move. Now, in terms of overbought and oversold, you can see that we're basically neutral in both the NYSE and in the NASDAQ. And in terms of total volume, you can see what's happening with total volume here. This is total volume on the NYSE. So you can see volume declining as this rally occurred. The same thing with the NASDAQ. You can see volume declining pretty significantly. Total volume on the NASDAQ as this rally occurred going into the high of today. Now, we want to look at the other internals that I keep an eye on, and I'm beginning to see some deterioration. This is the percentage of stocks above the 50-day and 200-day moving averages. This is for the S&P 500. So you can see we really maxed out. This was pretty significant. 90% of the stocks in the S&P 500 were at above their 50-day moving average going back to the end of December. But you can see we're now starting to see some deterioration. The same thing with the 200-day moving average. And in the NASDAQ, you can see the same thing is occurring, that the percentage of stocks above their 50-day and 200-day moving average starting to decline. And the Russell is probably more significant. You can see what's happening within the Russell 2000. Pretty significant, almost 90% at the end of December. And now we're back down to 65% above the 50-day moving average. And 65% earlier last month, at the end of last month, and 200-day moving average, and now we're down to 58%. And you can see the weekly rotational pattern of the Russell. It really has not gone anywhere for quite some time. So while these deteriorations in the 50 and 200-day moving average charts, that could be significant, but certainly they're not something that I'm really excited about in terms of a move to the downside, at least not yet. But what I have to do is I have to keep an eye on all of the indications and all of the information coming from the market because we're at this inflection point, and I want to know from the market, from the information from the market, if we break out, is it being supported by traders and investors? Is it being supported by a greater percentage of stocks within the indices themselves, or is it not? If we break to the downside, I want to know the same thing. So this area of rotation here in the spiders and in the Qs gives us really a good indication. A breakout to the upside above the 480 area, followed with increasing volume and followed with increasing breadth and increasing percentage of stocks above their 50 and 200-day moving averages would be very supportive and would suggest the potential for a large move to new all-time highs. Alternatively, breaking to the downside, supported by volume, supported by breadth, would suggest then that we're going to see rotation back through the range and potential test of the 410 area, at least on an intermediate term basis. Have a great night and a great weekend, and I will pick this back up again for subscribers on Monday.